Well, I guess we should get started. Good morning. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here this morning to conduct technical and fundamental analysis with the overriding goal of trade planning. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's always a good idea to stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I've been trading for quite some time, a couple of decades now, and so you can rest assured I've sat in this seat every day looking at foreign exchange, looking at commodities, looking at the stock market, so on and so forth. And so I've learned a lot of things, and I've also made a lot of mistakes, and I've learned from those. So I'm here to share. Let me know. You're a boss. I consider myself a servant in this relationship when I'm doing these streams. So if you need help in a particular aspect of trading, whether it's technical, fundamental, or psychological, let me know. You don't have to reinvent the wheel, so to speak. So let me know how I can help, and I will do my best. You've also asked over the 20 years I've been doing this, the audience, traders, have asked me for additional resources, so I made them available. I wrote a book. I still have carpal tunnel syndrome from writing that book. So if your modality is learning from reading, I wrote a book, Strategic and Tactical Forex Trading. A link is in the description below. Don't worry, I'm not pitching that so I can make money. I think I make less than $5 per book. Okay, so I'm not in it for that. Now you're like, well, Wayne, it's an expensive book. Look, when you write a book, you sell the rights to a publisher, and they set the price. So it's their book. It's Wiley Publishing's book. I'm just the original author, and then I sold the rights. So anyway, so I'm not promoting it to get rich. If you learn from modality, I wrote a book. And I think it's still true today. And I think you'll find it's one of the more honest books in the world when it comes to learning how to trade Forex. So anyways, the book is there. Some people learn from videos, so I have free training videos. And then people want more details, even though that's sort of a methodology, they want to know deeper dive stuff. So there's, at FX Bootcamp, there's 65 hours of videos, training videos, and they're hardcore, they're good. There's some Harvard stuff in there for a whopping $88. And so once again, you can see it's the point of that isn't to get rich quick making $88 a year. So those resources are available. And then lastly, you're going to need a trustworthy, ethical service provider in your Forex trading business, and in particular to execute your trades into the interbanking system. The foreign exchange broker that has earned my loyalty and respect is Traders Way. A link to them is in the description below, and you will see that there's fast execution speed, narrow spreads, huge swaps. But I think it's their business model of symbiotic relationship that I think makes them unique, and the major reason why you should give them a shot. Maybe they'll earn your loyalty and respect. Gamma expiration today. Is that right, eh? Maybe it's short covering. Well, if there's a downtrend and you see up, very often, Luis, I would agree with you, that is profit taking. So for example, where's my drawing tool? For example, if you have a scenario like this, is this bulls buying? And I would say no, that's bears buying. This is bears buying. This is bears buying. And by buying, I mean taking profit, exiting. Okay? Now, if it then goes like this, Luis, right? And I think you'd agree. Okay? Who's buying here? Bulls. Okay? This one's bulls. This one's bears. So in this case, bears drove it down to some level of support and it caused them to take profit. They hit their target. And then, okay, it double bottomed. Bulls buy double bottoms, bulls buy higher lows. Bulls do not buy lower lows, so not bulls, not bulls, not bulls, bulls. Okay? So that's how I look at it. So if you see that happening, that might just be the thing. Here's tradersway.com, la 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 la, MT web, la 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 la. I like to pop it out. Where'd it go? Oh, it went way over here. So I popped it out. So now it's not a browser. It's a platform, a floating platform. Sweet. You got to go to MT5 to get the stock market. And there's the S&P 500. Put it on an hour. And you can see down, 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 stabilizing. And we might want to mark this. Okay. Cool. Okay. The thing is, I guess if we're actually going to mark something, oops. Okay, we could remove some of this stuff. And you might want to ask yourself a simple question. I was going to quote a movie, but there's so many movies to quote like that. All right. Is that a double bottom? Okay, is that a double bottom? Is that the end? Is that the end of the decline? Could be significant. So, that's good, right? I think I'm fully deployed around 39. So, 38.60. Yeah. We'll see. I'm not. I think it can get worse before it can get better. I think people oversimplify. For example, China reopens. Okay, good. Boom. But then people realize a week later, wait, it takes a while to get like people back to the factories and the factories started. And then you got to make stuff and then you got to box it up and then you got to put it on a truck. But are there truck drivers yet? And then the truck's got to go to a port. But the port is backed up for months. So even if you could make stuff, when do they get on ships? And then you got to put it on a ship. And then that takes, 60-something days to get to the United States. And then how long does it take us to unload the ship and put that on a truck? And then are there truckers? And then that's got to go to an Amazon distribution warehouse. And when does that get fulfilled? And then it's got to go on another truck. And is there truckers for that? And what about last mile delivery? And you're like, dude, if China opens now, we might not have toys at Christmas time. And how much are you willing to pay for a Barbie dream house? Are you a good dad? Or are you just a lousy, no good, normal, average dad? Huh? If you're a real dad, you'd have the 2022 Barbie Dream House at Christmas time. The only thing is it's going to cost you $2,386 buying it on eBay from a Barbie Dream House scalper. Man up, bro. Come on, daddy. Okay. So anyways, Raymond's apologizing for his camo last night. Hey, man, you do you. So anyways, imagine prices at Christmas time if there's not much to buy. When do we really get hit by inflation? Also, the Swing Trading Group had an amazing meeting last night. Amazing. And we looked at 7 different economies and broke it down piece by piece by piece. And one interesting thing is the United States the economy is starting to slow down. Inflation is still high, although maybe slowing down, or at least a glitch, a blip. But what about jobs? We haven't lost jobs yet. Okay? We haven't lost jobs yet in the United States. Are we going to lose jobs? Or if we go into recession, someone's going to lose a job. And it'll be interesting to see how that plays out. If JP Morgan lays off 7,000 workers, how will the stock fare? How will all the other banks react and fare? Is this the bottom? Well, the pain may not have actually started. Have you seen inflation in the UK? 9%. Okay, this is actually what we did last night. Okay. Okay, high inflation, very, very interesting. Very interesting, huh? So the United States doesn't have 9% inflation, but we could. We haven't lost jobs yet, but we could. That is something we built in the swing trading meeting last night. We built it as a group on a shared spreadsheet. It's the power of having, a couple of dozen above average good-looking people. On average, we're above average. Yeah. But we went through, and then, from that we created trade plans. But anyways, it's what the swing traders do. But it's not for everyone. It's super awesome. We have a great time, amazingly collaborative, maybe even a little bit inspirational. Maybe we cover awesome stuff, but it's $99 a month. So that's the big downer, huh? It's a whopping $99 a month. Yeah, our meeting was like, what was it, 4 hours last night? I got 99 problems, but a pip ain't one. So anyways, there could be a lot more pain is all I'm saying. Okay, there could be a lot more pain. I'm not saying there can be, but this double bottom doesn't have to be the bottom. There could be a double bottom of a double bottom. And seasonally, this really shouldn't rally long term. It could rally for a month. It could rally for a week. But technically, you better recognize, okay? You have to recognize that. And then if we do go higher than this, that is, again, technically significant. So you should be a lot less of a bear now, not necessarily a bull now. So you're almost in neutrality. Wade. Okay. I'm actually glad it's this low now, because if you recall, starting, when was it? I think in this period here, I said, I'm going to save money. Maybe it was this pullback. No, because I would have thought this up. So anyways, I started to save money here because I thought right around this period, this would come down 10 to 20%. And yeah, and I did. Wait, no, that's too far back. Wait, that's the year before. Wait, am I brain farting? I am brain farting here. January 2022. No, I guess that's right. Anyway, so I saved for 6 months. And I bought some here, and I bought some here, and I bought some here. That's where I'm deployed. Okay? No, there's no great recession. Okay? We are removing excess. So the way to look at it, okay? The way to look at it, guys, is like, what's the difference between a great recession or, financial collapse of the market? This is bullshit money. So you have to look at it that way. Peloton being $500 a share is stupid. Zoom being $500 a share is stupid. Okay, so on and so forth. Dumb. But there was just lots of money laying around, dumb people with dumb money investing into dumb ideas, and you get things like, wow, the stock's up 1,000%. Well, first of all, that's dumb, and second of all, if you're up 1,000%, you should get out. But anyways, it's just dumb. We call that excess liquidity. Okay? So a lot of this was based on old quantitative easing. And then later on, okay, based on stimulus. So excess money with rich people, free money for poor people, and there's just too much money. And what that does, by the way, is push the stock market up and pushes the value of houses up. And very often, if it leads to inflation, pushes up commodities. But very few people say, I got free money from the government. I want to buy some wheat. It's not even that easy to buy wheat futures, right? So anyways, so what happened? People opened up a Robinhood account and started flipping meme stocks. That's dumb money doing dumb things with their money and whatever. And don't get all pissy with me. Oh, wait, whoa. Okay? Anyways, it only happens when there's free money. All right. So what is occurring now is all that dumb money is being wiped out. Okay? To put it in perspective, the dot-com crisis was bad, right? $2 trillion was wiped out. Okay? 2008, financial crisis. That was terrible. That wiped out $4 trillion. Currently, now, we've erased $7 trillion. Now, how the hell could that be? How could this be $7 trillion in market cap loss? How could that be almost twice 2008? Because the market caps were insane because of all the free money. Going back to 2008 and then exasperated by the United States government giving $5 trillion away. So if you could just say, you know, if you wipe out the $5 trillion the government added, which pushed this up, which was BS money, and then that's been lost, then we're back to just a dot-com crisis. And once again, that's just now hedge funds and some other guys that were betting on growth stock. Hey, I'm Kathy Wood. Look at me. I'm buying all the dumb stocks. Look how famous I am. I made money on the BS rally. All right, did you get out? No, I'm losing money on the BS, right? So anyways, so you get dumb ideas. They come and they go. And that stupid money will get wiped out. Maybe we've wiped it out already. But this is market cap loss so far, which tells you that it's not worse than the dot-com crisis. Okay, that was bad. It's not worse than 2008, where the banks were literally going out of business. Okay? Insurance companies were going out of business. Mortgage companies were going out of business. That was horrible. We're at full employment. We've already lost $7 trillion. Why? $5 trillion of it was fake money to begin with. So Theta says, when will it reach normality? When we've wiped out the dumb ideas, the dumb companies, the dumb investors. This is what capitalism does, by the way. So capitalism would have let the banks die. For example, in 2008. You would have JP Morgan is probably the only bank in the United States. That's what capitalism would have done. Wells Fargo, dead. So on and so forth, right? Just, it would die because their managers made dumb decisions and must pay the consequences. So anyways, the government intervened and bailed everybody out. Okay? Capitalism wouldn't do that. And I mean capitalism as a model, not like, but whatever. Okay? Just don't overtake my words. So a free market, let's say, would take all the bad banks, all the dumb banks with the bad mortgages, and then you say, you made bad decisions. You didn't do your work. You didn't vet the mortgages that you have. You're just pumped out mortgages. You must die. And they just push all the bankers out the window, lock the front door, and that's that. Okay, so anyways, in this round, so all the bailouts eventually lead to a moral hazard. But because of all of that, we had very low interest rates. And that's okay, actually. But that excess money was still kind of sloshing around, had to go somewhere. Okay? But low interest rates are not bad as long as you're doing international trade. If you're doing trade with other countries, it's deflationary. And the classic example that I always think of is I remember when OLED TVs came out, and I saw them at the Sam's Club. At the Sam's Club, you know, big warehouse. You walk in and there's a big TV section. They're just stacked on shelves. There's nothing fancy, just boom. And I remember looking at organic light emitting diodes. Fancy TV. And I'm looking at them and they're like amazing. Ridiculously amazing. And for a 55-inch OLED, I think when they came out, they were like $12,000. 6 months later, they're $9,000. 6 months after that, they're $7,000. A year after that, they're about $2,000. Deflationary. Prices fell from $12,000 to $2,000. But for $5,000, you can get the 65-inch. 2 years earlier, they didn't even make 65-inch OLED TVs. And you're like, that's nice. And you could just wait 6 months and get a 30% discount. And you're like, I can wait. And then those prices kept coming down. And why? Well, Americans traded with South Korea. So pray for Joe Biden to get better deals from Samsung so you can get, well, Samsung doesn't do light emitting diode, OLED. They say it's OLED-like. No, it's not. So if you want an OLED TV, you got to get it from LG, but also a South Korean company. And so anyways, as long as we're trading with South Korea and buying OLED TVs, they will get cheaper and they will get bigger and then they'll get cheaper and then they'll get bigger. And pretty soon you'll have an 85-inch OLED TV and you paid like $3,300 for it. And it, you know, it's just ridiculous. But think of how much your life will improve. I laugh because it's just funny, right? But your standard of living goes up. Okay? All right, your teenager's on drugs or is pregnant, but you can drink beer and watch football on an 85-inch OLED TV. And you're like, well, screw them. I'm going to watch TV. And problem solved, right? You got a problem? Get a bigger TV. Yeah. 8K, man. Dancing with the Stars, or you can watch Ryan Seacrest in a double-breasted suit in 8K. Okay? So as long as we have global trade, it's deflationary. The more you trade with foreigners, the more you're going to have deflationary pressure, which means money is cheap because you don't need much money. That's the whole thing with inflation. If inflation's going up, you need more money to buy stuff. And if inflation's going down, you need less money to buy stuff. Stuff is cheaper. Prices are falling. Your dollar is a dollar. Now, I don't know how you get your dollar, but once you got it, how much does it buy? Okay? We call that PPP. Okay? Can't remember the last time I turned on. Yeah. I actually watched, what do you call it? The stupid singing show. And I was trying to be nice. I was trying to spend time with my wife and like share a moment. And she's watching very mediocre singers trying to get to the final round. And I'm like, they're not even good singers. But anyways, I'm watching it and I'm like, I get maybe 45 minutes into it and I'm like, I just can't do this. This is so stupid. And I don't want to watch anymore. But anyways, Ryan Seacrest does a good job. I think he's a hustler. Anyways, that's right. Beatrice got it. Purchasing power parity. How much does a buck buy? So the best way to do this is to trade internationally. And it's not necessarily because people work cheaper in other places, although that can be one of the things, but it's really through specialization. Now, Elon Musk does this, but he also does this on a local level. So he recently was talking about the plant he built in Texas, for Tesla. It's 1 mile long by 1/4 mile wide. Oh, holy shiat. Huh? Holy snot. 1 mile long by 1/4 mile wide. Oh my God. And 80 feet tall. Thank you, Brian. Oh my God. Why would you build such a thing? Economy of scale. If you're going to make 1,000 Teslas, you might as well make 10 million Teslas. Because if you can find a way to make 10 million, each Tesla becomes cheaper and cheaper and cheaper to make. Also, excuse me, he's decided not to use the typical supply chain model that, let's say, GM uses. What GM does is they simply buy a bunch of parts that other companies make, wait for FedEx to arrive. Okay? Just like you're waiting for your Amazon shipment. 2 days! What the hell? Why do I have to wait 2 days for my shipment? Well, the GM guys are standing at the front of the factory waiting for the FedEx trucks to show up. Hey, we got some starters over here. Okay. Okay. And once you got all your parts delivered, you put them all together and sell them. They're like, hey, this is a General Motors car. This is a GM truck. This is a Chevy Silverado. You're like, well, it's actually 27,000 parts made by other companies. They don't make the electronics or the software. They don't make the brakes. They don't make the starter. They don't make the transmission or whatever, right? And so they're basically giant assemblies. So anyway, so Tesla needs something bigger because they make their stuff. A lot of it, not all of it, of course, but they make a lot of their stuff. So apparently the first thing that happens is they build these battery cells, and then they put them together and build the batteries. And then over there, they're building the electric motors, and then, so on and so forth. They're making their own, body and frame and, all that kind of stuff. So anyway, so bigger the better, because if they can increase quantity, the price per unit falls. And in fact, if you double it, think about it this way. If it costs $100,000 to make a Tesla, to make one, and they sell it for $130,000, okay? Something like that. Okay, it costs $100,000. But you make it costs $100,000 per unit, per car, if you make 200,000 of them. And so you're like, well, we're going to sell them for 125 grand, so you're going to make 25,000 per car. Okay, great. And people are buying them as fast as they can. Good, great. But if you make 400,000 right? 400,000, okay? So you've doubled manufacturing because you opened a giant new plant. Okay? The law of this process will dictate that your cost per unit now is 70,000. But you're still selling them for 125 all day long. So instead of making 25,000, you're making 55,000 per car, per unit. Profit margin. So your profit margin has more than doubled as you double production. Okay? So if you go from 200,000 to 400,000 of a Model X, and 200,000 to 400,000 in Model S, and 200,000 to the Model, what is it, 3? And I don't know the Teslas, but whatever. To me, you got like the SUV Tesla, the nice Tesla and the cheap Tesla, right? So that's how I think of them. I don't know the names of the models. But anyways, right, you can see profit margins go up, not exponentially, but significantly. So if you're going to build a plant, build it as big as possible, okay? Brian's like, hey, I listened to this interview and thought it was great. He said Tesla was like 6 cars in one company, which is what I'm explaining now. Yeah. Genius, genius, genius. Anyways, yeah. Yeah, he does. I have to admit, I think he does a pretty good job getting out there. Like he runs all these companies, but he is out there as well. And he seems to be a good CEO where he's always out there promoting whatever needs to get promoted. And when nothing gets promoted, he finds something to get promoted. And, you know, he's an engineer, which means it's not in his nature. And he's learned how to do it. And he's smart enough to know how to do it, right? All that kind of stuff. But dare I say, he might actually, because he's out there enough, you see him, I don't know if I'm being too bold here, he might be maturing as well. Like he's learning. And maybe that's his greatest strength, that he keeps learning, right? But anyways, who knows? Interesting dude, though. Got to give him that. All right, so what else is going on in the world, huh? Commitment of Traders reports coming out today, remember, at the close. Commitment of UT, or do you mean commencement? Oh. And other major universities to create programs to train employees for specific positions along with tax incentives. Had to lieu a lot with them. Well, you also have to, like, if you're not from around these parts, Andrew, and I don't know if you are or not, I left California 13 years ago now, I guess, because it became, stupid and ugly. I'd lived in California for quite some time. And when I left, I'd gone from the dot-com boom to the bust, and then we had that 8-year rally in the market. But when I moved there, when I was part of the Silicon Valley, it was an entrepreneurial renaissance. It was normal to work 24 hours a day, sleep under your desk like Jerry Yang, but that was normal. And I was very well hooked up in the entrepreneurial community at that point. And I saw the people building Facebook and Facebook like before Facebook, there were other stuff, and I knew the founders and the CEOs, and they were building cool things. Like I saw stuff way nicer than Facebook, probably 5 years before Facebook was even in a Zuckerberg brain somewhere. And trust me, he's not that sophisticated. But it was normal because we were in an entrepreneurial renaissance in the early 90s. And when you met and knew the entrepreneurs, when you met and knew the venture capitalists, the Silicon Valley, I mean, not the Valley, but as far as like internet was brand new. So the Silicon Valley was still like, people were programming on Spark stations and stuff. So they were still the new hardware was coming out, and in the early 90s and late 80s, there was sort of a software boom and bust. So then we were moving to like, you can't have better software unless you have better computers. And so we were kind of back to hardware. And this internet idea was brand new. Like I worked at Cisco Systems when it just moved out of the trailers. So you have to understand, I'm talking about way before that. Anyways, the entrepreneurs there worked 24 hours a day, not to get rich, because they were trying to make the world a better place and they could see the potential of the internet to help do that. And I'm not talking about a couple of guys I knew. I knew hundreds, if not thousands. Okay, I was very well connected, and everyone gathered, whether it was entrepreneurs with their ideas and business plans, or the investors, whether they're angel or a VC. The idea is like, wow, this thing's going to be amazing. The future's going to be amazing. What can we do to make this amazing future become reality? And that went up for a while. And then in the late 90s, people were moving in, companies were moving in to get in the game, get rich, make the money. Wake up, you got to make the money. And rapers and pillagers were coming in and destroyed everything good. Then after that, after the financial crisis, it happened again as the economy was recovering between year 2000 and 2008. People were moving there because I want to work at Facebook. I want to work at Google. And I knew this. I used to do speeches at universities, right? So I remember even speaking. I spoke in front of several hundred students at Georgia Tech University. And I did my speech and everything. And then everyone came up like, how can I work at Google? How can I work at Facebook? I'm like, why would you want to do that? Like, but anyways, but there was such an attitude change. And then the friends that I knew in California, they weren't working 24 hours a day. Stuff like that. It had changed. And so anyways, so I had left the Silicon Valley because that entrepreneurial renaissance was crushed and replaced. And now it was just like a giant factory. But you have to understand, it was poorly built to begin with. The schools sucked. Everything was expensive. Taxes were stupid. Stupid. And one year, the year I left, California sent me an IOU. The state of California owed me $50,000. And they didn't have it. The roads were terrible. The traffic was terrible. The air was terrible. Just like, oh my God, it wasn't the dream land, the land of opportunity anymore. And so anyway, so I left. So if you look at it now from Elon Musk's perspective, why did he leave? And he says it's quite simple. He built that building in Texas, 1 mile long, quarter mile wide, 80 feet tall, and he did it in 18 months. He said if he had tried to do it in California, and he had the government's backing, which means the state governor, let's say, was in on it, like it's going to bring jobs to California, they would still be in the permit process right now. He says, like, that's the major difference. We went to Texas. Texas says, get it done. Okay? California is like, we're going to tax the hell out of you. We're going to throw all these regulations on you. You're going to have to bribe every government department to even get these permits. So on and so forth. And then even then, if you make the cars, you'll never get them out of California because they'll be stuck in traffic. So anyways, so there's a lot of reasons to get out. I was at the highest tax bracket in California, and my state taxes were something like 10%. Like 10% state taxes. And the roads suck, the schools suck, The prison system sucked. The government sucked. It was just not cool. And when you pull away that beautiful little entrepreneurial enclave, you remove the entrepreneurial renaissance, and it just wasn't fun anymore. Okay. And I remember on a visit, I visited a buddy of mine. I'm like, hey, let's go for cigars. So anyways, we go for cigars to a place that's been there 100 years, right? Anyways, so we get our cigars, and he's like, hey, let's go to Starbucks for coffee. So anyways, we're walking down the street, and we pass a Pete's Coffee, not a Starbucks. Anyways, we're on the corner, and there's a guy, and this is funny because it's totally California. Ponytail, his, $3,000 bicycle leaning against the wall, locked, because in California you have to lock everything, because people steal from you. So he's got his $3,000 bike, and he's got the fancy shoes where he's walking around. It's going click, 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 click on the sidewalk. I'm like, right? Full spandex outfit. Just drinking his caramel macchiato. I'm like, dude, you're not even riding the bike. I doubt it. I doubt more than you did a quarter mile in this thing. And you got the, $400 shoes that clip into the pedals. I'm like, I doubt it, man. I doubt it. You wouldn't be sitting here drinking with a caramel macchiato. Anyways, so he's at the cafe, and I'm at the light waiting to cross the street to go farther from him. And I'm smoking the cigar, and my buddy's smoking his cigar. Guys, do you mind? Like, he was pissed off that we were 30 feet away from him smoking cigars. And I'm just like, I can't take this place. I can't take it anymore. So anyways. But I'm telling you, though, Silicon Valley was truly amazing. Just really an amazing place at one time. It was, and it's just different now. I guess it's more mature, but I think it's ugly for people to I don't know. It's just different. I shouldn't say ugly, but it's different. People used to move there to change the world, and now they move there because they want to get stock options or something. I'm like, dude, why don't you change the world and get rich instead of move somewhere in the world to get rich? Why don't you create the value? But anyways, whatever. So going back to Andrew's comment, tax incentives had a lot to do with them moving to Texas. I think what happened was it was clear that it was impossible to do in California. And whose fault is that? California. Okay. California. Okay. I think of him building a building that big, and that guy in spandex riding his prissy little $3,000 bicycle in his prissy little spandex outfit with his avocado conditioned blonde ponytail saying, guys, you can't build this building here. Oops. Okay. Anyways, do you mind, guys? Build it somewhere else. Okay. So, I grew up as a young man and an entrepreneur in the Silicon Valley, and later on Silicon Alley. I actually did a lot there. And I was actually attempting at one point, right before the 2008 crisis, to live in both New York City and San Francisco at the same time, because I was doing stuff constantly. And I was that guy where I'd get on to TWA going from San Francisco to New York. I'd get on and they would automatically pour me a scotch before I even sat in my seat. Right? And then they'd bring it to me. Here you go, Wayne. And then they take my coat, and you're not even supposed to pour alcohol until you're above 10,000 feet. They would just bring it to me because I'd see them almost every other week, that kind of stuff. But now it's interesting because all the friends I made, not all of them, but many of my friends that I had made over those years, especially the ones that hit it big, they made millions because they created value. But they made their millions and millions and millions, tens of millions, 100 million. You know what they did? They left. A lot of them, like probably half of them, if not more than half. And in particular, if they made their money, they left. They don't live in California anymore. Is that right, Luis? Yeah, San Fran? Frisco? Man, yeah, it used to be a tiny little town. Anywho, so there's the history of the world as I know it. We'll leave that rant there. Yeah, Brian's like, yeah, those were magical entrepreneurial times. Yeah, Brian is definitely an entrepreneur. And so, yeah. Yeah. Those are good times. The spirit and the energy to me is what's important. Yeah, yeah. Austin has changed a lot. I was there 15 years ago. No, 14 years ago. And it was already kind of overgrown. So add another 15 years. Holy smokes, for sure. But yeah, it's pretty, and there's good restaurants, and there's good culture, like the music, the food, all that kind of stuff. It's a great place. But I remember I was trading all night that time I was there, and so I was up at 3, 4 o'clock in the morning, and then I realized the sun. Like the sky was going from pitch black to kind of turning a little bit red. And I'm like, oh, I need another cup of coffee. This is me on vacation, by the way, trading Forex at 3 o'clock in the morning. So anyways, I don't know, it must have been 4:50 or something. And I just started seeing it going from pitch black to somehow not pitch black, but the sun hadn't come up yet. So anyways, so I'm like, I need another cup of coffee. So I head downstairs, boom, 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 boom. I go into the kitchen. And I pour myself a cup of coffee. And then I look out the backyard and the sun, the first ray of light came up, right? Just the first little boop. I'm like, oh my God, I got to watch the sunrise. Like literally the first ray of light. So I go up to the patio door and I slide it open to go outside with my cup of coffee at 4:55 in the morning, and I'm almost knocked over on my face or on my back, like a punch in the face from Mike Tyson. Just wow, the heat. It was not, like, no joking, it was 111 degrees at 4:55 in the morning, and I'd been in air conditioning. I was cold. I was cold. I'm drinking coffee because I'm cold. I'm in the AC all night. I'm like, oh, I need to go outside. Maybe watch the sunrise, get the nice warm air on me. Boom! Holy crap! Just like shock. And humid. Like it's practically a rainforest, except there's no plants, there's no trees, there's nothing, there's just nothing alive. It's just dark red clay. and 111 or whatever it was at 4:55 in the morning and 90% humidity, and just like, oh my God, you got to be ready for that. Got to be ready for that. Anyways, I'm like, if I was going to live somewhere that hot and that humid, I want to live in a jungle. I'd rather live in, I don't know, Singapore or something. Singapore is great because the tropical rainforest is amazing. All right, so look, plan is still the same. Okay, waiting for a turn. Okay. This could be interesting. Okay. You can see bulls bought here. Why? Because the bullish buy zone is here. You can't see it. I have this set up to be a bear. But bulls bought it because they were supposed to. Bears sold it because they were supposed to. You have to actually look at that. This is where bulls buy. This is where bears sell. Where are we now? No man's land. Is that right, Barry? I think seasonally, though, pound is what you're supposed to be trading on that. But again, seasonality is weird this year. So there's only two ways to look at this, truly, if you're going to use technical analysis. Okay, bulls bought it here, and it was the right thing to do if you're a bull. We don't know if it's the profitable thing, but it is the correct thing. And the basis of that trade is they're treating it like a higher low, which will lead to a higher high, which will lead to a higher low, which will lead to a higher high. We call that trade planning. So I know exactly what they've planned out. I don't know how many, of course, but it's just basic rules. Okay? Up, higher low, higher high, higher low, higher high. That's how they planned it. That's how they're thinking about it. All their charts are set up that way. They're using the moving averages. They're using daily pivot points. They're using price action. That is factual. That's what they're thinking. We just don't know the quantity of those thinking that way. But if you were looking at this chart alone, just this chart, and you were not using pivot points, you would have bought this 21 and you would ride the 21 higher. I'm just thinking if the 21's doing that, then price is going to, okay, pull away, right? Divert, converge, diverge. Okay, so that's what they are thinking. That is their plan. That is a fact, Jack. Now, maybe because of a different time frame, bears would beg to disagree. And for whatever reason, they're saying double top. Now, it wouldn't be because of this chart, because that's not what the moving averages are saying. So they're looking at it from a different point of view. Lower time frame, higher time frame, but just not this time frame. But they are looking for down later today to make a lower low, up Sunday, down Monday. And that's what they're thinking. Are they correct? I don't know. There's no other plan. They can't be thinking anything else. Okay. Cool. So you get the idea there. Yeah, yeah. Jomu's on oil. Don't you always get me upset, Johnny? And Johnny is an addict now. Got him hooked on crude. It's tempting, huh? Obsessed. You're right. That's better, right? That's not a negative connotation, right? So you're right. Let's take a look at this point of view. Okay, cool. It's been a good gig. It's my life. My heart is like an open highway. Like Johnny said, I did it my way. All right, there we go. All right. Hey, let me poll you guys. I'm gonna throw something out here. And remember, this is anonymous, so this could be interesting. Let's see. I'm going to even put a dollar figure in this survey. Interested. It'd be something that we would do over the summer. So one would be pretty simple. Like on oil, I'd have to teach you about, the global supply chain of oil, maybe even the upstream and downstream of oil. How do you get it? What do you do with it when you got it? Who buys it? What does it get turned into? What are the alternative sources of energy? But then later on, you'd have to look at, government reporting agencies, and you would have to, talk about OPEC and go through some of their reports, and then you'd have to do supply and demand economics, and then you'd have to go into like scalp, spot, and swing trading of that. Now, cryptocurrency would be a lot different because we'd have to cover things like, well, what the hell is the blockchain, and what is a cryptocurrency, and what are shit coins, and what are, these, dollar pegged things, and then what is Ethereum, and what is the future, and like there's so much to it. How do you get it? Like, what is a miner? What do they do? How do you build a mining rig? How do you make money? And then what do you do? And what's a pool? And like, we'd have to cover so much more. It'd be an industry education, not necessarily a trading education. Right? Like, a basic thing is like, why can't Bitcoin actually be a currency in the future? It can't. It cannot be a currency in the future. Where you go to Starbucks, you're like, okay, give me a latte. I'm going to pay with Bitcoin. It can't happen. It can happen artificially and they can pretend it's happening, but someone's just taking the risk that you actually have a cryptocurrency, or a Bitcoin. So it actually wouldn't work. They couldn't verify using the technology that you actually had Bitcoin. So it cannot ever function as a proper, true medium of exchange. You can move $1 million if you're willing to wait 2 hours. But to buy a $2 latte, you can't wait 2 hours. Okay? So anyway, so you'd have to like, why? And then what's the alternative? And then what's being made? And then what is this? And what is that? And, so anyways, that'd be a much different course. Okay? I like oil only because it's so macro related. And it's great for scalping. Abdullah says, do you think the S&P 500 will keep going up in the next 10 years? Absolutely. Yep. All right. So anyways, thank you for that. Looks like you guys are into oil and not so much on the crypto side, which is interesting because the previous feedback was a lot of people were interested in crypto and blockchain and all that. And well, it looks like even more people are interested in oil. So maybe I'll look into that. Maybe I'll do that for you this summer. But thank you for doing that. I appreciate that. Usually takes me like, I don't know. How many hours do you think it took me to make the macroeconomics course? 100? Plus I hired a PhD to do the slides for me. And so I could outline things on paper and say, this is what I want, go do it and animate it, but be able to communicate. Like I'd say to the PhD, I'm like, look, we're going to cover the solo growth model part 1. And these are the things what I'm trying to do. And here's what I'm trying to say. And then we're going to have to do the solo growth model. So I want to see, I want the depreciation line to do this. And I want to do the investment line to do that. And then, and I want to compare this to standard of living. And he would get it. Like you have to have pretty complicated conversations. So obviously when you're hiring a PhD in economics, he's expensive. Less expensive than me, but expensive. So like to throw a course together, it's 100 hours of time and, $10,000 of whatever, cost. So that's why there's a price. That's all. That's why there's a price. You weren't sure. So that's interesting. I like scalping oil. I always have. So cool. There was a time when I traded oil futures and not oil, whatever this stuff is, some weird derivative, because these are not actually CFDs, so I'm not even sure what these are. That MT4 brokers use, but it's some sort of derivative of it. So it gets taxed like Forex, which is good. But when you're doing, I used to do like stocks, stock indices, stock futures, and those three things would be taxed differently. So anyways, I stopped doing that after 1 year. I had something like a tax return that was 700 pages long. It cost me a lot of money just to do my taxes, and then I had to pay my taxes, right? And it was just crazy. And they're just like, well, we have to treat everything as a different thing and like almost like a different business. So I'm like, all right, I just stopped. I trade everything through Forex because it was the best. All right, so anyways, a little bit of yen strength again, a little bit of dollar strength again. That's cool. Kitty CAD recovering a bit. Cool. Awesome. Pound recovering a bit. Cool. Euro down. So it's just interesting. Let's look at this one again, and we can see we're at elevated prices. But what does right? What do bulls do? Okay. There's your double bottom. Okay. Higher high, higher low. Okay. But then confirmed much higher high off the double bottom. Higher low off the central pivot point. Higher high. Okay. Higher low on the roll reversal. Okay. And that's why I drew this, by the way, because you knew a higher high was going to create a higher low. And then somebody bought that, and now they're expecting a new higher high, probably in the target area. So if you go all the way back to this bottom here, the right shoulder of the double bottom, okay, did you know it predicts 64.29? Did you know that? On Sunday, even Friday afternoon, said if this holds as support, the projected high for next week, which is now, today, Friday, right? The projected high is you'll hit 64.29 as a minimum before, on or before Friday. Isn't that cool? Now, it could go as high as the next one, 64.83, but whatever. And then you got this as 64.5, so whatever. Okay. Cool, right? Okay, on the higher time frame, it's still not a bullish trend. Depends on how far back you want to measure. Like Frankie said, I did it my way. Okay, whatever. Depends on how you analyze it. But nonetheless, the bare minimum is like on this time frame, okay, we'll call this one a high, higher low, lower high, right? Lower high. And then you might argue that this now, okay, is a higher low, higher high, higher low, okay? You might argue that there's a change going on, okay? Mr. Wave might say, nah, it's a correction, and then we're going to resume back down. Could be a rabbit, could be. Okay? A major impact for this. And by the way, last night in the swing trading group, we went over a specific fundamental indicator for Kiwi, so that you don't have to guess, okay, when Kiwi is going to get strong. You can confirm it through fundamentals. But that fundamental report said in here, Kiwi is probably going to weaken. Cool. Cool. Kind of looks like that, right? All right. So anyway, so we have a way to confirm this. But I think major part of this whole dang thing is whether this is going up or not. Okay. So in a month, are we going to be here? I guess. Sell at the London close, sell at the London close, sell at the London close, sell at the London close. Well, wait, London open. Wait, those are weeklies. Anyways, maybe that's a little off. These are weeklies. Anyways, sell on Thursday, sell on Thursday, sell on Wednesday, sell on Tuesday. I don't know. So the thing is, are we going to be here in the next 30 days? That's what you have to decide. Okay. Are we going to be here or are we going to be here? Well, this will dictate everything you do. Okay. So for example, if this goes up, we were just looking at Kiwi dollar, you would probably see NZD go up. Okay? If you believe down, you will probably see NZD fall. Okay? So you have to decide. It's the basis. How do you figure that out? That's your research or your patience. But one of the things we talked about in the swing trading group last night is what do you do if you've gone through a bad period of losing, for example, or you just feel disconnected from what's happening, maybe just a bad day and you're like, why is everything going the opposite of what I think? And you rebuild your foundation through fundamentals. And you build a fundamental model of what you'll need to see maybe here before you change your bias. You do it technically on a market like this, or you do it fundamentally like, do I still have it open? Which one? I have multiple versions. I don't know if this is the pretty one. Let me do the newer one I did. Okay. Okay. Or you do it like this, where you're looking at for Australia, for example, or let's go back to New Zealand. Previous GDP, GDP now differential. Previous inflation, current inflation differential. Previous unemployment, current unemployment differential. Previous interest rate now differential. And you create a scorecard fundamentally of whether you want to be a buyer. So you go here, do you want to be a buyer or a seller? And you subjectively say, well, there's more green than red, so I'm a buyer. I don't know, whatever your decision making is. And then you might look at all of this and say neutral. And this one, you're a seller, right? So you're like, all right, so maybe I want to trade Kiwi pound. Okay, so you pull up pound Kiwi and you look for a trade. Look for a trade. Mm-hmm. And you say the UK is in trouble and New Zealand's going to rebound. not from your opinion, but from your analysis. And you're like, I'm going to catch the next rotation down, so it's going to come up, and I'm going to sell this hard next week. Okay? Who up? It's how you regroup and make decisions. Huh? Anyways, we did oil, what was it, 2 weeks ago or 3 weeks ago? We did it in the swing trading group. And I showed fundamentally why oil should go up. But the interesting thing is, boy, did the technicals matter, huh? Crazy. Okay. And so now you're deciding next week, how are you going to play it? And in fact, I'm wondering if this opens up the door for a move to 125. The lid has to come off. Can you see it? Ooh la la. But that has to start with a fundamental bias. You could never say back to 125 if you didn't have the fundamental bias. Otherwise, you're like, I don't know. It doesn't feel like, I don't know. It just doesn't feel good. It just doesn't, I don't think it's going to go to 119. I just don't like that kind of language. What do you mean you think? What, like you guess? What do you mean you feel? You mean emotionally? You're like, well, emotionally. I was like, dude, is it going to go to 125 or not? Give me a fact. I could bust out a fact. In fact, I role played when we talked about this 3 weeks ago. And by the way, we were at like 95 or something. We role played where I said, imagine you're now at a dinner with a potential investor into your fund, and he cuts into a steak and he's chewing a little bit. Hey, what do you think about oil? And you got a 20-minute speech of fact. You could talk facts for probably 20 minutes. You're like, think about oil. Let me tell you what I know about oil. And you can go through it fundamentally, technically, all these things. You could command the room. And you clearly know what you're talking about. You've clearly done the research and you clearly have fact-based biases, not even opinion, bias. And that makes you an expert. How many people heard that? That role play? It must have been good because Johnny's been trading oil ever since. Okay? If Johnny was that investor sitting at the table with $10 million, he would have invested with me. Huh? Cool, right? So that's how I want you to think. And then from that, you act. Okay? Cool. Bitcoin back up to the top of the range. Remember, we did this just a day or two ago. I had trapped this in a range. And I said, this is the bottom of the range in which bulls would buy. It would go to the top of the range in which bears would sell. And what you could do is trade your biasy. If you're unsure what your biasy is, wait for the break and the retracement. Okay. So at some point, you need to back out and say, when do you plan for next month? If you are a bull, you must be thinking, we're back to 41,000, maybe 42,000, right? If you're a bull, okay. $32K by July. Okay, now, I would have to say, hey man, why do you think 42K by July? Oh, because you believe the S&P 500 is going to rally. Sorry. Trying to get my mouse to work here. S&P 500 will go up significantly. Let's say from where we are now, from 3,800 to 4,400 by July. So S&P 500 up, Bitcoin up. You'd have to know that if you're talking this, you are also saying that. And if you don't think that's happening, then this idea that you just spoke to me about is dumb. Makes no sense whatsoever. If you think this up and that down, I'm like, dude, you don't know what the hell you're talking about. So it gets translated. Your opinions get translated. If you're thinking back to 40K, you're thinking stock market rally, and you're like, no, I don't think the stock market's going up. Well, then you don't think Bitcoin's going to go up. Okay? Okay. Cameron is talking hyperbole, which is great if you're making movies. I hope you turn that into a movie, Cameron. Okay. So I guess that's that, I guess. I don't know. Yeah. Luis says volatility today So be careful. Best way to do that, like vol can be good. If you get into a trade, keep your stop close and jam it when you can and then walk away. Try not to screw with it. One of these things is like the vol could really work for you, the volatility. So you jam a trade, it's pretty good, and then it pops in the direction you thought, because obviously that's why you took the trade. So you jam your stop and then walk away and go for the home run, go for the hero or zero. Don't trade with volatility to make pennies. It's just dumb. High risk, low reward is never smart. It's just not smart. So if you're going to take the shot, remove the risk and hit a home run. You're like, I'm not going to take 20 pips. I'm taking 200 or nothing. I'd rather have nothing than 20. Because 20 doesn't compensate you for the risk. It's like a negative Sharpe ratio. You're like, why did you do that? Okay. So if you're going to do it and you're going to take the vol today, hit it hard by jamming your stop, taking a walk. So on oil, it'd be like you're going for $5 today, not 50 cents. So once you're up 50 cents, 75 cents, jam your stop near break even and then leave. Don't watch it. Check it out on Saturday. Oh, how did I do yesterday? Oh, look at that. I'm up $4. Nice, which is the equivalent of 400 pips. Okay, so don't scalp it today, but treat your stop like a scalp, but treat your limit like a swing. If that's me, that's what I would do. That's what the Wayne recommend. My name is Wayne McDonald, and I confirm this message. What do they say in politics? I agree, and I approve. My name is Wayne McDonald, and I approve this message. So have a wonderful weekend, everybody. Stock market's open. It's a beautiful day. Don't let it get away. Uh-oh. It's a terrible day. Look at that. Cry me a river. Cry me a river. I'll see you tomorrow. No, I won't. I'll see you Monday. Unless you're in my day trading group, we'll see you Sunday night. Because only amateurs wait till Monday to trade. Stop's already at break even by Monday morning. Think about that. Snap! That just happened. Booyah. See you later.